everyone, we are going to talk about our project 3. Here is our group member Yang Tianhao, Jiang Xiaoyue, Jia Yaoyao, Huang Yuxuan. We choose the third problem, cryptocurrency trading. We try to use our strategy to trade for 4 major cryptocurrencies based on their OHLCV. From this graph, we can see that the cryptocurrencies are highly volatile, especially for TRX and US within these 4. So we try to build up several types of machine learning models to predict their future trends and apply several strategies. I first tried to use light GBM to predict the percentage change of close price relative to last minute, and turning the parameter by Bayesian optimization for each currencies. And my strategy is according to the average close price of each currency, set the proportion of money allocation, and reset the allocation every day. Once 4 money are used, only show the assets given the negative signals. If the price increase more than the threshold compared with last trade, show 2 units of asset. If decrease more than the threshold, show 2 units, otherwise do nothing. Then I will pass to my group member.
Okay, let us talk about the trading strategy that I have used in this project. In order to measure the fluctuation of the price and the risk, we consider using the volatility indicators to perform the trading strategy. True range indicator is a price fluctuation indicator that can display the magnitude of asset price fluctuations. The indicator calculates the range between the close price and open price during one day, as well as the range between the highest and lowest prices of the day. The ratio of the two can be used to determine the change in asset price volatility, and true range can be obtained by applying the following formulas. When the true range is less than the lower bound, we will get into a long position, and when the true range is larger than the upper bound, we will get into a short position. From the balance curve shown below, we can find that the result of this strategy does not perform well at a negative yield of 0.036. Therefore, we are supposed to try some other factors which are more adapted to analyzing price trends of cryptocurrency. The next strategy is about the exponential moving average, which is a trend type indicator. Serves as a moving average weighted by exponential decreasing. The construction principle is to obtain the arithmetic average of the close prices and analyze them based on the calculation results to determine the future trend of price changes. In the EMA strategy, if the short-term crosses the long-term EMA from bottom to top, it will generate the long signal, and correspondingly, if the short-term EMA crosses the long-term EMA from top to bottom, the short signal will be generated. We can use the following formulas to calculate the indicator EMA at a counter N. We choose the bar length equals to 30, so we can capture short signals or long signals of every 30 minutes. From the balance curve and outcomes, we can find that this strategy makes profit in the late 2020 with great fluctuations, which shows the instability in terms of this market trend.
This is Jia Yaoyao, and my method for crypto trading is KNN. Since length of 4 datasets are not equal, it is hard to consider weight for each cryptocurrency in only one portfolio. So I set 4 types of crypto equal weight, which means they all have maximum $25,000 at the beginning, and each cryptocurrency position is independent of each other. Then I analyze portfolios separately, calculate different evaluation indexes, and choose ones with better performance. From the P&L curve of four portfolio, we could see crypto, BTC, ETH, LTC loses money, and XRP got profit. And according to calculation at the right side, we could see the four portfolios Sharpe ratio is negative 15.7, negative 0.85, negative 14.6, and positive 0.9. Here I said Sharpe ratios risk-free are equal to 2%. And the four portfolios max drawdown is negative 0.225, negative 0.115, negative 0.024, and negative 0.277. And the total return of the four portfolio is negative 5,596, negative 1,800, negative 580, and positive 10,500. Since we consider more about the total return and the Sharpe ratio, therefore we only choose XRP as our betting crypto using KN model because it's only positive according to Sharpe ratio and total revenue.
So the next part is Q-learning. During the Q-learning, we divide the total asset into 4 equal parts, with each account investing in only one type of digital cryptocurrency, and the initial capital for each account is $25,000. The action space is listed as follows, and the epsilon is 0.9, the alpha is 0.1, and the gamma is 0.9. There are 2,048 possible states based on the following criteria for digital cryptocurrencies: whether the cash on the current day accounts for more than 30% or 70% of total assets, whether the value indicators in the past 60 days is less than or greater than 85, and whether there is a cross of MA5 above or below the MA20, and whether there is a doji pattern, whether there is a bullish engulfing and a bearish engulfing pattern, and whether the daily return is greater than or less than 0. During the training, at time Tn, the market state is evaluated, and that at time Tn plus 1, a decision is made in the action space based on the previously evaluated market state. We can buy a criterion of we can buy a certain amount of currency represented by the action. The expected additional return of the action is used to represent the reward for the action, and the Q table is updated accordingly. Each currency has its own Q table, and each Q table is trained as the training data for 3 reputations, and the final Q table obtained from the last reputation is used as the learned Q table. We can see during the training, due to the overall decline in the currency spot prices in the training set, the training strategy learned by the model formed poorly overall, and after learning, the model is more willing to hold more currencies, but also bear more risk as a result. During the back test, we can see as time goes by, the strategy also increased its position in the currency, and due to the strategy decline is smaller than the overall market decline, the drawdown is also smaller. I think the strategy is achieved expected performance. The total return of the strategy is 0.98%. The daily return of the strategy is minus 0.05%. The max drawdown is 1.51%, and the Sharpe ratio is minus 2.87. And I think a possible improvement for our strategies is to have access to the depth of the sell price. the extremely short-term scenarios, if the sell price depth is shallow, the current currency price can easily be breached. Moreover, due to the low market trading volume, we may get trapped without being able to close our position, resulting in a significant loss to our account. Therefore, I believe that incorporating this data into our model will bring a significant enhancement. Thank you. That's all our presentation.